Today, a second consecutive jaw-dropping IPO as Airbnb more than doubles in its Wall Street debut, just 24 hours after its Silicon Valley peer DoorDash climbed 86% in its first trading session. Plus, a panel of outside FDA advisors spent all day in a meeting. Their objective? Answer one question. Do the benefits of the Pfizer and BioNTech COVID-19 vaccine outweigh the risks? And finally, the government tries to break up Facebook. I'm MacKenzie Sigalos, and this is CNBC After Hours. A mixed day on Wall Street as the Dow and S&P close lower, while the Nasdaq finishes 0.5% higher. Investors have their hopes up that Congress can agree on a coronavirus relief bill that will pump more money into the economy. But it's the same story on Capitol Hill. The same players disagreeing over the same points. So we'll update you guys when there's actually news on that front. One area of interest where there is news, the FDA's COVID-19 vaccine approval process. Now, today, a committee of FDA advisors met to review the vaccine that Pfizer and BioNTech developed together. It's the same one the UK recently approved for emergency use and is currently using to vaccinate its population. Now, the FDA itself still has to meet after this committee gives its opinion, but the process is underway. The country's first COVID vaccine could be authorized for emergency use any day now. If Pfizer and BioNTech get the green light in the United States, distribution is set to begin within days. But mass adoption is not a guarantee. Roughly 4 in 10 Americans say that they would definitely or probably not get a vaccine, according to a recent Pew Research Center poll. Employers, however, may not be willing to take no for an answer. I've been talking to lawyers across the country, and they all say that their corporate clients are reaching out to them in record numbers to ask what they should do about the vaccine. Some are considering giving cash bonuses to employees who opt into getting the vaccine, while others may penalize employees who refuse. COVID-19 and government-mandated lockdowns have taken a toll on all different sorts of companies, from manufacturers to restaurants.
They view it as a selling point. That's particularly important for restaurants, bars, gyms, and salons. And so my clients in that segment of service industry are particularly looking hard at making it mandatory.
While this is in part a PR tactic, it is also legally within an employer's rights to roll out this kind of requirement. Legal experts say that businesses have pretty extensive rights. Requiring a vaccine is a health and safety work rule. Some employers, such as hospitals, already require employees to get flu shots every year. So, under the law, an employer can force an employee to get vaccinated, and if they don't, fire them. There are a few ways that employees could apply to be exempt from a blanket requirement. If a workforce is unionized, the collective bargaining agreement may require negotiating with the union before mandating a vaccine. Anti-discrimination laws also provide some protections. Now, other employers are taking a different route, offering incentives to workers to voluntarily get vaccinated. That could mean that if you get the vaccine, you don't have to wear the same level of PPE in the office or have your temperature taken every day. There's also talk of financial perks.
Many of my clients who are struggling with this issue have said, well, while we think it's a good idea to make it mandatory, we are going to make it voluntary, but we're going to try to offer economic incentives, bonuses, as well as paying for the vaccination and offering optionally, if the family wants to have the vaccination, to pay for that too.
Dunn says his clients are looking at their balance sheets to see if they can afford to pay employees some sort of cash bonus if they get the vaccine. As for when this could happen, lawyers tell me that employers are probably a few months away from making a decision either way. An emergency use authorization is not a license, so there is a legal question as to whether you can mandate an emergency observation. Mandatory vaccination protocols, therefore, may have to wait until the FDA completes the entire approval process for the Pfizer-BioNTech vaccine. Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
This is obviously the first vaccine to be making it towards the finish line, and and perhaps soon going over in terms of an emergency use authorization. But there are many other vaccines in development, and they'll probably be, second and third generations of COVID-19 vaccines.
The consequences, though, I think would be really, really significant for the people who use and rely on Instagram. We can make our messaging products more compelling by working with and leveraging the work from the Messenger team. We can make our creator suite of tools more compelling by leveraging work from the rest of the family as well to help creators reach more people.
What the pandemic has shown us is, even though we were focused on carbon and reducing carbon emissions before the pandemic, what this has shown us is emphasized how we are all connected as part of a global community. And everything that happens everywhere in the world is tied together.
Travel is never going to look like it did in January because the world is never going to look like it did in January. And I think what it's going to mean is that travel is going to get redistributed to thousands of cities. And I think people are going to stay longer, and they're going to be looking for more intimate, authentic experiences.
All right, that last point about the future of travel from Airbnb CEO Brian Chesky, well, it's an important one. He said that going forward, many more locations will welcome tourists who themselves will be craving a more intimate experience. Sounds a lot like the exact service that his company sells. Well, for better or worse, Wall Street is buying it, every last bit of it. Airbnb made its debut as a publicly traded company today and absolutely blew away expectations. The stock more than doubled on its first day of trading. It's now worth roughly $90 billion, 3 times what it was worth at the beginning of the year, before the COVID-19 pandemic all but shut down the global travel industry. Think about that for a second. Airbnb is worth more today than it was a year ago, when it was bringing in more revenue than it is right now. For context, Marriott is worth $42 billion, Hilton $29 billion, and Intercontinental Hotels $11 billion. Fellow online travel company Booking Holdings, which owns sites like Kayak, Priceline, and Booking.com, is worth $86 billion, and Expedia $18 billion. Airbnb debuted at a higher valuation than all of them. Senior CNBC.com tech reporter Ari Levy broke down the company's roller coaster ride in 2020.
Airbnb had its IPO on Wednesday night, sold shares at $68 a share, and opened on Thursday at $146. So a huge pop. This is a company that has had just a roller coaster of a year through the pandemic. Came into 2020 as one of the hottest names in tech. Then the pandemic hits, and like everything in the travel, tourist, hospitality industry, business takes a nosedive. And then there's this sort of remarkable turnaround that happens in the summer where all of a sudden people realize that they can actually travel. They just don't want to really be around other people. Airbnb came into the year with its most recent private valuation around $31 billion. That was from a round they raised back in 2017. So coming into the year with that valuation, they then raised debt and slashed the valuation, raised debt at very high interest rates, double-digit interest rates, primarily recognizing that the business is just going to be smaller. You're seeing you saw a dramatic decline in revenue in the second quarter. Things came roaring back in the third quarter, even though it was still 18% below, from a revenue perspective, 18% below a year earlier. Today, they're valued at 3 times where they were a year ago. It's still seeing declining revenue. The fourth quarter will be the third straight revenue decline the company has seen. So second quarter, third quarter, and fourth quarter, not typically the type of performance that you would associate with a more than 100% debut from an IPO and a $90 billion market cap. And you have a totally different generation of young investors now using apps like Robinhood and other things where it's very easy to buy stocks, buy fractional shares, be social while you're investing. Those things all certainly play together. And the more that component plays into investments, the less it's about fundamentals and the more it's just about gotta own Airbnb, price doesn't matter, not paying attention to fundamentals. It's very interesting to see DoorDash and Airbnb go on consecutive days because they play into a similar part of the market, which are these consumer experiences that are popular with millennials, that have very sleek app experiences. And there just aren't that many of them that people have the opportunity to invest in. There's no doubt that if you thought Airbnb and DoorDash looked pricey at the time of the IPO, that now they look insane. These stories always become fundamental stories about the performance of the company eventually. What kind of momentum is DoorDash able to maintain when we get to a post-pandemic world? You're betting on a whole slew of things right now if you're buying into these stocks. When we just have a general market correction, do these stocks get hit the hardest? Again, nobody pays me to make predictions about stock performance, but those are clearly things that investors would be asking themselves.
Okay, time for today's numbers round. Let's kick it off with 40,000. SpaceX launched the latest prototype for its Starship rocket to about 40,000 feet altitude in a test yesterday. That's Starship's highest altitude on record. The test was successful until the last moment, when the rocket exploded on impact as it tried to land. Explosion aside, SpaceX CEO Elon Musk tweeted that he was pleased with the overall results of the flight test, including development objectives like aerodynamics. Next, $1 trillion. American homeowners are $1 trillion richer after this year's housing boom, fueled by the COVID-19 pandemic and an exodus from dense urban centers like New York and San Francisco. Home prices soared, and so did home equity. In the past year, owners with mortgages, who represent about 63% of properties, saw their equity increase by 10.8%, according to CoreLogic. That's the equivalent of a collective $1 trillion in gains equity, which comes out to an average of $17,000 per homeowner. And finally, 48. A coalition of attorneys general from 48 states and territories sued Facebook yesterday, alleging anti-competitive practices and taking specific aim at Facebook's acquisitions of Instagram and WhatsApp. The Federal Trade Commission also sued Facebook yesterday, alleging similar claims. So both lawsuits advocate actions that would result in breaking up Facebook as we know it, forcing the tech giant to spin off Instagram and WhatsApp into their own standalone companies. Now, for its part, Facebook calls the claims, quote, revisionist history, pointing out that the federal government approved both acquisitions years ago. There's a lot to parse through here. These lawsuits come less than 2 months after the Department of Justice sued Google in an antitrust case, and Wall Street firm Cowen thinks there's a 60% chance that Amazon faces antitrust litigation in the next 2 years. And Apple, 40%. Read the full Facebook lawsuits alongside expert analysis by going to CNBC.com and downloading the CNBC app. That's it for After Hours. We'll be back here in our home office every Tuesday, Thursday, and Friday, so be sure to catch us then.